Good afternoon, welcome to Micro Route number 241. It's Stuart Williamson here at the helm. This week, how Donald Trump, bless him, second term could affect or impact UK house prices. Will it be great? Will it be golden time for the US economy? Will it create opportunities in the UK market for us as buy-to-let or investors? That's a question, isn't it? $64,000 question, as we used to say in the old days. Okay, what are the key points to consider? Let's look at it historically. Historically, has Republican or Democratic governments done better over there for the UK market? Well, Democrats, as a rule, have given us a 10% better growth in UK property during their terms. There's been a couple of slight aberrations, obviously COVID and the financial crisis, but basically that's what happens to the UK house prices. Why is that? Because the Republicans tend to be more make America great again, i.e. more isolationist, more keeping up tariffs, and basically because of that it's going to potentially increase inflation and therefore make the dollar stronger. So therefore, if you have 10 to 60% tariffs around the world, US inflation will go up and it will strengthen the dollar. And knock-on effects for the UK, 35% of all UK imports are dollar denominated, and it'll make it more expensive for us. Bank of England may well want to keep interest rates higher or even increase them. Fixed rate mortgages will go up in price already. We've seen the 5-year SONIA swap rate going up, went from 3.4% in September to 4.3% in mid-January. So it's going to have quite a negative effect potentially on the Republican market if you take that in Republican government, if you take that in isolation. So that's not great for the UK. Things to consider then when you're looking at what's going on in the UK during the Trump administration. Look at interest rate trends. Currently, the UK Bank of England is talking about reducing rates. Will it actually carry on? Can it do that under the Trump-led policies? Let's look at when we're buying property, stuff that's going to give us real cap appreciation. Where is the best places for that? Look at long-term rentals. Where are good? Perhaps HMOs are a thing to consider. Houses of multiple occupancy. Perhaps purpose-built student accommodation. Make sure you're buying quality stock as opposed to stuff that's not so great, stuff that will go up in price. Because remember, on the back of all this, Knight Frank are still saying that they expect a 17.6% rise in properties by 2029. So that's pretty phenomenal. So there is quite a lot of negativity out there. Short term, I think we'll probably see a bit of a bump in the house prices, but and stamp duty is increased in March, April. So it is a bit of a concerning time. Okay, and a backdrop of this, I thought, it's rather depressing. I mean, why has the IMF upgraded the UK's potential growth? And so I had a route around for some more research on that, and there's some great stuff from PwC, and it says that, and this is actually taken from the Guardian reporting it. The IMF says that it expects us to do in the UK 1.6% growth next year compared to 1.5% previously, and that's on the back of improved household finances, better investment spending by the government, and interest rate cuts. And that's what the IMF said last week. And now they're the big brains, they're not stupid, they know what's coming with the Trump administration. So for them to come up with that, I think is quite brave. So at Davos last week, or just before Davos, PwC surveyed 5,000 top business leaders, chief executives around the world from 109 countries, and they are saying that they put the UK in second place behind America as the place where they will be investing their money. And the quote is, the UK is the second most attractive country for investment behind the US, signaling a climb up the rankings according to annual survey by PwC. Puts us ahead of China, Germany and India. Marks the highest ranking for the UK in a 28-year history, up from 4th in 2024. Rachel Reeves said the latest results show global CEOs are backing Britain and the UK's most attractive destinations for international investment, and it's this investment that will help drive economic growth and improve living standards across the UK. The UK was singled out by 14% of all chief executives as a destination of the most forthcoming capital investment, foreign investment going forward, just behind the US, which was on 30%. China was on 9%, and China on 12%. They've both got their own problems. Germany's got a recession going on, elections coming up. China has got recessionary problems with its own. So that, with Donald Trump's huge import taxes on China, will have a big effect. So that's actually quite positive about the overall picture. So if you look at Trumpism in isolation, then it could be quite negative. But overall, the picture is positive for the UK. And I've said this many times before, If you go back over the last 35 years that I've been doing this myself and investing, the end has been nigh many times. You know, the dot-com bubble, if you remember that. You know, if you remember the 2000s when all the computers were going to turn off. If you look at all these things, COVID was the end of the world as we know it. House prices doubled. Financial crisis. There's always a reason why people don't want to buy, and they will always find reasons why not to buy. But it's a case of be smart, buy good quality property in good locations, and it will do well. So let's end with some questions from the past few weeks. We've got 369 Dabbler. Don't forget how appalling Liz Truss, Boris Johnson, Michael Gove and company were for 14 years. Should be charged with deception. Instead they released books. Keir Starmer and Rachel Reeves aren't in touch either. So who or what do we choose? It's a very tricky one. You know, Nigel Farage, Reform, they're sort of saying lots of things that people seem to like. They're at the top of the rankings at the moment. But I don't think, you know, we can even think about it. The thing to think about is, can you buy a property that has got good fundamentals, you know, population growth, infrastructure growth, employment growth in a good location. Choose wisely. Don't buy a shoebox 40 stories high, 400 units. Buy something unique, something that's got some cachet, you know, something like that, and something that's going to give you good growth because of its location, close to where people want to rent. You know, so back yourself. Don't wait for the government to back you. You know, we're a country of entrepreneurs. You know, expats are entrepreneurs. Embrace that. Okay, JEDW 510. It's an international takedown under WEF orders. They're all in on it. It's part of the Great Reset, or perhaps better put, the Great Taking. As an expat, I look forward to reading your ebook. Glad you said that. We've had a lot of very positive feedback on the first parts of the ebook that have gone out. A big list of people who want to get hold of it. So do sign up for it if you wish at the link below. And people are finding it motivational. I had one gentleman write to me last week, who I know I've got to write back to you shortly. And he said, send me more information on these things. I'm really motivated again. This is why I was going to do property in the first place. Finally, Antonio Marino said, the economy in Poland is flourishing. Why don't you expatriate there? That's a good point. I mean, I saw that their spending on on defence spending had gone up from, I think, 7th in the world, or 7th part of NATO, to about 3rd. So they must be doing well to be able to afford that. You know, so it's a good economy. Buy in places like that, but look if you can actually own it, and if you have the right legal control over it. In many places you can't do that. Look around the world. We've been doing a lot of work in Phuket. That's got a freehold purchasing opportunity at the moment. You know, Lombok, Bali, you can't do that. So be careful where you do buy if you're going to buy internationally. And as I always say, don't put more than 10% of your net worth into a foreign country. What if it goes wrong? 10% wouldn't kill you. Be painful, but wouldn't be the end of the world. So do sign up for the ebook. I hope you'll enjoy it. Trump's second term, what will it mean? I don't honestly think an awful large amount. It's, as ever, buy smartly, buy cleverly, try and get as good a mortgage deal as you can. What the IMF says and what PwC are saying, that's fantastic. Perhaps the UK isn't as bad as people think it is. A lot of it is coffee machine gossip. Don't get sucked into that. Thank you very much. Do take care. Bye bye.